Hi, everyone. This is Simon, the host of the FundKernel podcast. In this episode, I am honored to be joined by Nicholas Cheung, the Chief Investment Officer for Sinorich Securities. I've met Nicholas a couple of months ago and thought that in our conversation, I thought that he really knows his stuff. And in this podcast, what's particularly interesting is I learned how he got into the trading activities. I think he started off as an accountant finance guy, and then because of a specific professor in his university, he got into trading and have been doing that ever since. Now, as a CIO, he is responsible for many investment mandate, especially with the family offices. And I'm particularly interested in how he's able to manage many different portfolios for these family offices and learn quite a bit from him from this podcast. So I hope that you would be enjoying the conversation that I've had with Nicholas as well. So thank you very much, and enjoy the podcast.
Oh yeah. Well, of course, I will really good now. Doesn't look professional? You got a very good microphones here, and you got the earphones here as well. It'll be all right.
Limited budget. What are we gonna do? If I have sufficient budget, I'll get a very nice place with the studio, and then with a headphone, it's gonna look grand. But until we get to that point, we'll make do with what we have.
Great. I love your system. Yes, lovely.
Yeah. But I'll show you what I've got to make the conversation better. Oh, you can't see it.
Can say, hey, what's it? What's it? Is it beer? Wine? Drinks?
No, it's a whiskey, dude.
Risky. Wow.
We're
rock.
in iPhone 8. We're stuck. Are you at work, or you're at home?
Work from home.
Oh, work from home. All right. So
Yeah.
type work from home. So
All right.
what are we gonna do? So I'm just gonna.
Yeah, I got something similar too. Yeah.
Well, look, thank you very much for doing this, Nicholas. We're already recording, by the way.
All right. Yeah. You will have a little trim off or cut off a little bit, right?
Maybe, I don't know, depending on how the conversation go. These type of conversation can be very interesting. That's the thing, right?
Oh yes, could do. Yes, I agree.
Yeah. So cheers for you. Thank you for
All right.
joining on this.
Thank you. Thanks. Yeah.
So, for those of you who don't know, Nicholas is the CIO, Chief Investment Officer for Sinorich. Is that how you pronounce your company?
Yeah, Sinorich, yes.
Right. But you also run a consulting company, right?
Yes, it is, and it's called Teamful Insight, by the way. Yeah.
Okay, Teamful Insight. What do they do? What do you do there?
Well, actually, it's basically providing consultation service for a business, how it's operate. But more than that, it's basically help the owner or the founder to analyze how their business going and also the performance, especially in financial data and financial market.
Yeah.
In which case, if any company comes to me and I could see, all right, how you doing in the market, even with compare in the industry or the peers.
Yeah.
If you're a listed company, I can even give you a bit data signals for like to analyze your company, like how the stock price going up or down, how's the demand on your business or operations in the business field or in the industry.
Yeah. Okay. All right. Well, I mean, you and I haven't known each other for very long, actually. I think we would say like 5 months.
Wow, you're actually counting on it. I would only say less than a year.
Well, less than a year, certainly less than a year.
Yeah,
right?
to make it romantic or wonderful,
So I'm actually glad you're willing to come on the podcast, because I think it helps me to get to know you a little bit better.
Thanks for invite, by the way. Yeah, thanks for invite.
No, I'm glad to have you. And yeah, like I said, I mean, it gives me an opportunity to know you a little bit better, know your background. I'm not from the financial services industry, so obviously I look forward to learning a lot from you. And I think we're living in a very interesting time, and from your perspective, I would love to understand where you're coming from and how you see the world today. But why don't you kind of run us down? I mean, how does your journey begin? What got you here? What's your background's like?
What my background's like? Do you
Yeah.
mean like
Tell us your story. What's your story from the beginning, from the very beginning?
very beginning, even before I was born and come
Well,
to the earth?
you can tell that. I mean, if you can tell that, then you got to teach me how to tell those stories. But
All right then. Okay,
yeah,
I try to make it in a funny and effective way, right? Oh yeah, just to make it sounds more interesting to understand more about me. All right. Before I was born, it's got to be about my dad and mom. All right. Maybe something happened, and then it's got me to arrive to Earth. All right. And maybe let's skip to the university studies for my life. Yeah. I do in accounting and finance. Yeah, in a business school, business faculty school is a
which one?
university
Which
in
which?
Lo in London,
Oh, it's in
Kingston.
London. All
Yeah,
right.
yeah, in London. Yeah, in that few years, actually, I'm not quite sure did I pick a wrong subjects or wrong majors to study. You know, a typical Chinese person would really love to do business or earning money. I don't know why. This is the very funny phenomenon in Hong Kong or in China areas. When you talk to anyone, they love money. They love to do business. Yeah.
Well, I mean, I guess Chinese a little bit more, but yeah, go ahead.
Yeah. Very similar to that. And so that's why I would like to go to business faculty school. And just, I was thinking, all right, business school should be doing business. So whatever majors or whatever faculties or anything, they would love me to join their course, and they would do. So I just picked accounting and finance.
Yeah.
Yes. It sounds, when people come to a course, say accounting and finance, they probably think, oh, accounting is like, oh yeah, you got to do the business, and then you have lots of ledgers or transactions you have to um let's say tidy up on it. So that's why you probably might have a misunderstood of accounting is doing business, right? And also finance. When you talk about finance, it's like, wow, it's just like something about credit, about money, how to make some money. So um, that's why I try to pick these modules.
You're not
Yeah,
wrong. You're not wrong. Accounting is a critical part of business, and finance is both of them are really critical part of business. It's just that they're not sexy, right? They're not sexy. They're back
yeah,
office, they're middle office. They tend to be at the back, but they're a critical part of the business. So you're not wrong in that sense.
yeah. I agree with you. If I could have another chance to like do a seminar or a little talk to or introductions to any new student or new joins, anyone, I would probably say accounting is boring. All right, because you got to look at the numbers, but it's all right. I personally like to deal with the numbers. Yeah, so I'm all right with that. I won't say I really enjoyed it. Um, After the first 2 years, I went to this uni and trying to understand what accounting is, and then I started to feel, oh, this is a little boring for me. So I picked another module. It's about financial market.
Okay.
Yeah, yeah, and that's pretty much changing my life. Why I'm saying that because in our universities, we got a modules called International Financial Market, right? This module is the really funny one because they got to go to this class at 8 a.m. 8 a.m. in the morning,
Yeah.
and the lecturer would require you, they request you got to buy a newspaper called Financial Times, the brown one. Yeah,
Okay.
you got to buy one and read it before come to the lectures. Otherwise, you won't know what he's talking about.
Okay.
Yeah, and it's quite good. It got a student offer. It's like more than half price of copies. Yeah, but you can only get it from the university's cafeterias.
That's before the internet days, right?
Yeah, it's about so many years ago.
I
Sorry
just
about
outed
it.
your age.
You would know. You would know. Well, after our conversation, you could probably guess my age range. Yeah, and yeah, and everyone's just saying, "All right, half price, more than a half price. Oh, for a copy, very good." Yeah. So everyone got to go to get a copy before go to the lectures. However, the copies, I mean, the newspaper arrived at 7 a.m., I guess, and it's always sold out by 7:15.
Okay.
Unfortunately, I don't know why
They're very popular back then, I think.
they don't got much copies left. I mean, it got very number of copies,
Yeah.
limited every day.
Yeah.
So
Does it have to be Financial Times? It couldn't be anything else? I mean, it couldn't be the Sun or
I wish to do that, but that lectures, the teacher the teachers, the lecturers says you got to do Financial Times.
okay. So it
Yeah.
has Financial Times.
Yes. So I have this practice, so I got to go there like 6:45 and try to stay out of staying outside the cafeterias and wait for the newspaper come in and get a copies. Yeah. So I developed my reading practice. Yeah.
Right.
For the numbers, and so I couldn't really remember how much the paper was. But it's got quite a lot of information that you don't really get it. Yeah, because this is newspaper and this is quite exclusive. So you better watch, like, let's say, oh, Mark and Spencer share price, British petrol or something. What's news? M&A stuff for.
But he wants you to read the share prices.
And basically, he wants us to read the share prices, yes, and some financial news, and that's it.
Okay. And what is he gonna do with that though afterwards?
Well, this is very good questions. Promise me you won't laugh after I tell you the answer, right?
Oh.
All right. Basically, he wants you to know about the share price, a bit financial informations, and it says just to make sure you have a little memory on the market, what's going on, just to try to understand more about it if you know nothing about it. And that's pretty much
So it's
it.
sort of like asking you to sort of start sensing some sort of pattern in market behavior. Is that what he's trying to get you to learn?
Unfortunately, yes, it's pretty much that is it. So
that's a good thing. Why is it a fiction?
no, well, this is a very positive way to like start understanding the market, but I'm not quite sure how's your life going in universities. In London, it was quite cold, particularly in winter, even in spring. You got to be like go to there at like 6:45 and wait for a newspaper, and it is really killing feeling. And when you read, everyone get a copies, and they just want you to get the news, but it's not about the timing. Um, it doesn't got to be like the really updated news by yesterday or today.
Okay.
Even you go to the library or you go to some community center and you bring out those newspaper or any financial news, it could do. Even in our coursework, assignment, I guess you might know it. Oh, yeah.
So you get the paper, you read the share price, you read the news. Okay, so you read it, you go to your class. What does he quiz you on it? Does he ask you, okay, what's the share prices of, 3Mobile? I'm not sure what's the good, does he quiz you on that afterwards? Or what?
Oh yeah, maybe a quick question. Okay, what's the share price of HSBC today or yesterday? That's the hardest questions that we ever received in the years.
And he just comes out and just say, okay, so this is the first quiz, and he just asks you from Financial Times.
That lecture has got quite a few questions on us, but it won't affect your final grade. of your exam.
Okay.
So
So he's just trying to make sure, I think what he's trying to do is get you to develop the habit of looking at the market and start to get the pattern of the market and try to get a sense, which is, I think, which is good, because I think that's like from my, I'm not a very heavy-handed investors. I'm a very casual investor, and I don't have that practice. I don't look at the market the way that, I don't have the discipline as you do to look at a market on a daily basis, because I haven't been trained for it. And I think what he was doing was really interesting, because he's really developing that discipline in you to look at the market. But I think what's more important, and correct me if I'm wrong, I mean, I'm not sure if you feel that way afterwards, but I think more importantly, he kind of gets you to, maybe you could, after a while of developing, reading how the price fluctuates over time, and how news and different world activity impact the world, impact the market. You may sort of develop some sort of an emotional immunity to black swan event. Do you feel that? I mean, after a while of doing this, how long was the course? I mean, it was a few months, right? And he does that every day. Do you kind of maybe get a sense that, okay, I'm not as freaked out when something happened and the price dropped like 6%? I'm not as freaked out as I was before.
Well, this is I would say this is a few questions involved in it. So I try to answer it part by part, right? For the first question, you were saying, is the lecturers try to train us or test us in the market sense or the discipline? At that moment, well, I mean, when I was still a uni student, I was thinking, he just try to make us not to be that lazy,
Right.
and that's it. Or maybe you would say, oh yeah, maybe the lecturers didn't read the newspaper. He bothered to like spend the full price to buy a copy, so they just want me to provide him a message or information.
Yeah.
Well, we in our group we probably think, oh yeah, that's the answer. But well, after that, I would say, all right, I'm not quite sure what his intentions, but it's a really good training and good practice for student or even anyone who do investment, or maybe to all investor, because it's training you to try to do a consistent practice. It's a habit, every morning 8 o'clock classes, and you got to get the copies by 7. If you really want to be succeed, you got to be there by 6:45. That means 6:45.
Yeah.
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 Even in a very cold conditions. Yeah.
It's very regimented, right? So it's like, yeah.
Yeah. Also, when you got a copy, it doesn't mean, oh, you win, or okay, or you pass, or you're done. You still have to like read for something. At least you have to flip the newspaper. A traditional Financial Times is like quite big, got quite a lot of pages, and share prices text isn't that big. It's like that much. You got to flip out and, all right, what's the price of HSBC? All right, Mark and Spencer. If you try to be smart in the class, you better read through everything. Yes. So I think it's a good practice, even for me. Currently, in the past 10 years, for doing positions called portfolio managers, I still have to read the news every day, every morning.
Yeah, it sticks with you. I mean, that constant repetitive created a habit in you, and it benefit you in your career.
Yeah, even when I first joined my previous firm, is an asset management firm. Most of the new joins members found it, it's a bit irritating for me. Oh, I just can't do it. Why? Because you got to like read the news or understand what's happening last night by 7 or 8 a.m.
Yeah.
Yes, in the morning. Yes. Sorry. Yeah, because the US market just ended like maybe 5 hours before Hong Kong markets open. So you got to do the informations, analyze them, and try to report to maybe your client or any investor or even your colleague. So I think I have developed this skill before I really joining this company. So it's a good skill. Yeah, it's a good practice.
Okay, so that class, right, got you interested in the financial market. I mean, have you so did that help you set your sight to become a trader right then and there because of that class?
That class just bring me some confidence, and also it just pushed me into a position that look at the market. You are in the market already. You knew it. If maybe Simon, maybe let me ask you, if you say you are not in the financial fields or investment, right? Or someone like you, they probably think, oh, investment is a very big topic for me. I better hire a consultant, or maybe I would hear comment from bank, the salesperson or sales representative. They just think, oh, my head is itchy and stuff like that. Or I feel happy about investment. But after the course, I feel, well, I don't know why it is like a magic button or a speed or like a ticket that get into the field. I understand things quick because of that course. Yes, the modules. It's only about a year. Yeah, actually, we have about 6 months for the length for the really course. University course isn't like daily school, like Monday, Tuesday, Thursday, Friday. It doesn't like that. It's just got like one lecture class and few tutorials a week, and that's it. Yeah.
Well, I mean, I'm very self-aware in that I know I'm not smart enough I'm not smart enough. I just think
Don't
I'm
say
not
that.
smart enough, nor am I disciplined enough to be a trader, right? To be someone who can be full-time can go full-time into a market. And I'm of a personality that I'm sort of like a control freak in a sense. Like I think if you are to be a trader, to be a good trader, and correct me if I'm wrong, I feel like if you are going to be a good trader that can consistently generate return, you have to be disciplined, but also more importantly, you have to stick by whatever strategy that you have developed, regardless of what's happened in the market, right? And you cannot be reactive. And to a certain extent, you have to leave it to faith in that sense. Like, I've set my strategy. This is where this is where I will sell short, and this is where I will buy, and I'll just need to stick to that. And whatever happens, happens. Whether it hit the short, whether it doesn't hit the short, whether I could generate that return or not generate that return, and very much I leave it to the market, right? And then after the market tells me whether my strategy works, then I make the adjustment. So I feel like for what you guys are doing, there's a certain period of time where you have to put a lot of trust in a market where you have basically no control over, right? And I'm not that type of person. I'm a very control-minded in the sense that I want to be able to have that control. Now, obviously, I'm trying to let go of that because, at the age of 46, I'm going to be with my white hair in 2 years. If I keep on taking that stance in life, I got to start taking the Buddha stance and just let things go. But I just feel that I don't have that. I don't have that characteristic like you do. And maybe it's because I didn't take the course that you guys had. Because if I had taken the course with a good instructor that sort of instilled that discipline in me, okay, every day just look at the Financial Times, look at the market, and then make your prediction, make your thing. Maybe that would be better, but that never happened in my life, right? And that's why we have you guys. That's why we
All
have.
right.
Yeah.
Well, for your experience, I found that quite interesting. A talent might help to succeed or to get in this field. However, I would say the discipline and also to make it the consistent, the you got to try to be consistent in doing one thing. Yeah, I believe
Yeah.
you could still succeed anyway. But yeah, for your cases, I would say different traders have different strategy. Yes, it does. And you're talking about faith. Yes, you have to really trust and believe in your strategies, in what you're thinking and what you're doing. You just can't say, right, I believe, let's say US market is going up strongly. So you keep buying. Yes, this is what you do. But if the market like sudden drop or have some financial events that not benefit to your insight, you're probably freaking out. But at that moment, you still have a very strong belief on yourself because why? You look at the market, you understand it. It is not like a gambling, like buy up and down. It's not like that. You got to like understand it, like get the information. All right, what is going to be next? What would be happen after such an event, or even let's say interest rate hike or rate cut. You got to have a very well developed planning and also with a lot of evidence and information that you really have to find yourself, even not in the newspaper.
So
Yes.
okay, so here's an interesting question,
Yeah.
right? You run a few, I think you mentioned when we had lunch the other day,
Yeah.
you used to run a few discretionary portfolio.
Yes, I do. Yeah.
Yeah. So how much preparation does it take for you to, okay, so let's say I'm a client and I say, hey, Nicholas, I have
Yeah.
$10 million
US
to run a
or
discretion
yen?
US, right?
US. Oh, right. Great. You
Yeah.
could be my client then.
FundKernel got bought and I have $10 million.
Great. Lovely.
So I want you to, I'm giving you 5 million to run a discretionary portfolio for me.
Mm-hmm.
What type of preparation? I mean, well, first of all, how do you go about in designing that? Now, understand, I'm an idiot, right? I don't know anything about investing. I just say, I have $5 million, Nicholas, and I expect you to give me like 8% returns.
Right. Wow.
Is that
interesting?
so? What are some of the things that you're going to do to sort of, what are some of the questions that you're going to ask me? And then what are some of the preparation that you will do before you execute whatever strategy? Well, first of all, yeah, whatever question that you're going to ask me, what are the preparation that you're going to do to formulate that strategy? And how long does it take for you to be comfortable with that strategy in order to execute it?
Right. That's a long topic. If I met you, it's right. Well, let's say if I met you in the very first years of my careers, it will take a very long time, maybe take more than few weeks. I was just guessing,
Right?
because my first portfolio doesn't got like 5 million US. To be honest, yeah.
Yeah.
It is in Hong Kong dollars, so you can work it out the assets amount, yeah.
Okay.
But now, I probably would say, maybe I could take not more than 10 minutes to like answer your questions for your investment, yeah.
Well, I don't have any question, right? Look, so again, here's the scenario. I don't have any question. I just say, Nicholas, I have $5 million.
Right.
And I want you to help me generate an 8% return. That's it. That's the parameters. So
Okay.
can you take me step by step as what you're going to do next afterwards? After I make that statement to you,
All right.
what's your next step?
Next step, probably I will ask about your personal information like phone numbers, email address. Yeah.
Here's
And
my card.
yeah, and try to like make you come in front to me and we have a
We're
little
sitting,
chat.
we're sitting in your office.
Oh yeah, let's say we are sitting in office. Oh well, basically do the account opening stuff,
Yeah,
KYC,
we did all that. We've done all that.
yeah, go on all the process, and then well, our person will talk to you like the risk taking. Like are you a risk taker or how do you feel about the investment? Are you conservative, aggressive, or something?
So
Yeah.
okay, so I'm 46 now. I have a wife, I have 2 kids. The kids are still young, but I'm not at an age where I just need a fixed income retirement. So I would say I am like I could take, from my perspective, I could take like a 70-30 risk at max, maybe even to a 75-25 risk. So maybe 25% I would just maybe have something to be protected to protect the wealth. And then 75 I can go yield enhancement.
All right. Yeah. So in this case, I probably would suggest you to do little allocations on your portfolios, like let's do say 70% of your money is for core investment. Core.
What does that mean? What does core investment mean?
Core. Oh, well, that's only my saying.
That's okay, yeah.
Well, I would say, well, let's say,
I want your perspective. So how do you define
yeah.
investment?
All right. Okay, because after I met you and understand your philosophy, so I would say, let's say 70% of the money that's from your investment, yeah. It probably do a conservative and stable investment.
Okay.
Yeah. Lower risks, fewer risks, middle return. I won't say a very high return. This is just to keep the cash flow and the income in a safer and fewer risk manner. For the rest,
are they going to be like fixed income? So there's going to be like constant income coming in from those investments?
well, it could do, yes. I can do fixed income, or even I could invest in equities. We could find some equities which are more stable, like ETF or stuff like that.
Right.
At least they got dividends. So that's to make your money invest in a product with some return at least. Yes.
Yeah.
Yeah.
So how many percentage did you say you were going to put in there out of my 5 million?
Well, actually, everyone's got different ideas. I would roughly say 70.
Oh,
We could
70% on those.
70. Yeah, it could adjust. We could adjust.
Okay.
Yes.
So we start off with 70 of those stuff.
Yes, and the rest of the 30% of the fund, I would suggest you could do a little bit high risk. Yeah, we can use a little aggressive strategies. This is a satellite investment strategies now. You have your core, you have your core 70, yes, which is pretty much, oh, no, I won't say pretty much, is more stable, lower risk to try to protect your whole money. Yes, but you still want, you say you got a wife, I don't know how you love your wife, how much you spend on your kids as well. Well, I try to not ask these questions in this video, it's quite personal.
You could ask. I mean, look,
It's perfect.
We live the, I mean, obviously I want a comfortable life for my family, but
Yes.
it's not like we're like, I know where I am. It's not like we're splurging on anything like that. I mean, just treat us like any single like normal family with the trip. But I think what's interesting though is so you actually, it's the opposite of me though. I think I initially said that I'll just maybe 25% at a lower risk and then 75% at a higher risk. You sort of flip that the other way around and say, no. You need to have 70% at a lower risk and 25% at a higher risk. So
well,
I'm not managing my own portfolio right now. My wife takes care of that because in that case I would have lost everything in that sense.
She's the account manager then. All right.
Oh,
well,
she's a lot smarter than me than I am in these. Like, I mean, I take her cues. Look, it's kind of ironic because I run a fintech platform that does investment, but I'm not an investment expert myself. My wife takes care of a lot of that because she's actually very disciplined in terms of looking into the market. She's actually very disciplined, but she's so disciplined in that she only invests in these few stocks that she's comfortable with, like the blue chip. And she looks at the market and whenever the price drops to a point, she'll guess, okay, now we go in. And then once it rises to another point, then okay, now we sell. And she has this system. Now she's not a professional trader or anything, She's very good with money. She's very good with, she's very disciplined in that sense. But we have been able to make some good coins out of these. I mean, obviously it's not enough for us to retire on, but you know, it helps with the finances. I just don't have that discipline. But going back to what you're saying is, it seems like from a professional like you, if I were to give you $5 million, you would run a 75% portfolio with a fixed income, less risky aspect, and then 20% more risky, more yield enhancement selection. So what would be in those 25%?
All right. Let me correct the first few sentence.
Okay.
Yeah, 70 is all right. Yeah. For the percentage, it could always adjust and amend in any time. Even well, if the client wishes, of course. Well, I just only give advice. This is what I think. Different managers got different rules.
You're my DPM, Liz.
Oh, right. Great. Great.
I'm giving you full discretion.
Yeah.
But how would you start me off? I think that's my point. How would you start me off?
Yeah, of course, we have to consider about the current market situations.
Yeah.
Yeah. If let's say if it is 2016 and 2019, something like that, I won't put that much. I mean, I won't put 70% to be your core strategies.
Now, what
about doing stable equities or fixed incomes. Oh, of course. Well, now we've got to be more safer and more. You need more stable income, and we got to do investment safely.
really?
Right? So that's why.
You think now is more even more riskier now than before?
Well, I would say that because look at the financial markets, like Nvidia's or lots of AI or tech-related stock or shares in not just in US, even worldwide, they rise a lot from a very cheap price to quite expensive now per shares. And I would say lots of investors, they invested it in a very low price and now it's go up. So that's means they get profit. What do? If you got profit, you're probably like, all right, I'm gonna sell all my stock, right? Sell it away, take the profit, and I go away, right? What's happened next in the market? If the profit takers decide these actions, and that means the price is going to go down.
Yeah.
So if you buy at the very historical high places, I mean high price, what next? You probably suffer. Oh, it's a unrealized loss and a drawdown for you. And I don't want you to be like, oh, so freaking out or like so afraid, so worried about, oh my God, how's the share price now? It's drawdown, 10%, 20%, oh no. And you don't know how long you have to wait. So I just try to spend and invest your money in a smart way and try to make more liquidities and try to make more flexible of the funds.
So you stay away from the volatile assets. You tend to stay away from the volatile assets.
Well, it's a quite complicated strategy and it's a multi ways of strategies. I would say I won't stay away with it, but I would still stick and put my attention over there because remember what I said? I would say I allocate 70% of a core strategies. How about the satellite? Satellite is 30%, and I would do a little bit risky stuff.
So you have the concept of core and satellite.
Yes, it is.
And satellite will be the risky stuff.
The satellite will be something coming into the rush decisions like buy now, sell maybe tomorrow. It won't be a long plan. It's a very short term and short period investment. It could be a little bit speculative. Could be a little bit, yeah. Because
okay. But that's interesting though, because look, a discretionary portfolio basically says is like I give you 5 million, and from an investor perspective, I shouldn't really care, right? It's a discretionary portfolio. I give it to you. I shouldn't be calling you at all, right?
Yeah.
How much pressure do you feel in that situation? I mean, And I seem to recall at lunch, you tell me the other day you managed like more than 10 discretionary portfolio.
Yeah.
How different are they between them?
Well, I would say it's a bit nightmare, and it is absolutely difficult for me. It's because I got a very conservative clients. They
Okay.
don't really speculative. Even I was suggesting, how about do some stock options or any forex options, derivative. Yeah, they say, oh no, what is that? No, 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 no. I just want a share stock. Okay,
That's
securities.
not
No,
really discretionary then, is it? I mean,
well, let's listen to the end of this story.
okay.
That kind of clients is a very easy one for beginners, for even junior managers, and it would be great because what they want is, I just want someone to like do the stock management for me because I don't look at the market. Yeah, and that's it. Well, this is very happy, right? Okay, then you take this client, you probably think, all right, this is a good one. Yeah, welcome, and maybe shake hands and let's do the transfer. All right, and then you will probably start trading in the next few days. Happy, right? All right. Then you started to manage different clients from now on. All right. Let's say it's got intermediate levels of clients. I don't know. Well, that's a joke. Okay. Let's say a middle levels. All right.
Okay.
And maybe they have maybe 10 to 20 years investment experience. They know something about it. They probably say, hey, dude, our managers, Nicholas, if I got 5M US, what do you do for me? I want some alphas. You probably think, oh, alphas. You know what alpha is. And then you probably write, oh, right, yes, this is experienced investor. Try to be professionals, or like you better elaborate your ideas more rather than just say, oh yeah, I look at the trend is going up, so buy shares. Oh, they probably say, I can do this myself, so why we're having these conversations? Yeah. Yeah, and then they probably think, all right, what is good? They were probably starting to request, like what you say, 8% per year, or I don't just want to buy shares anymore, other assets class or projects or investment items for them. Yeah, you
Yeah.
probably think of, all right, well, you talk to them and see what they want and what they really accepting. If you talk about stock options, well, probably you and me, oh yeah, stock option, yeah, I know what it is. Yeah, long call, long put, short call, short put, butterfly, stuff like that. You got lots of strategies. Yeah, but if they think, if they like it and say, all right, go ahead. But if they might not that understand clearly, or they don't understand the pictures, like you say, should I do a butterfly for you, or a credit spread or something like that? They probably think, what is that? You probably piss them off. So you you got to try to like understand, all right, what is more than security or stock, all right? Do you think bond is all right? What's the philosophy? Just like you were telling me that, all right, I got families, I know nothing about it. I know some about stock. So I will have a picture like where you are. Yeah. So I can like try to increase the difficulties of the complexities of the financial products to you. So I try to use bond funds
Yeah.
for the clients. And and then I found out my second client is like he's really experienced in Hong Kong shares, but something like out of Hong Kong, oh, he probably know nothing about it.
Mm.
So I suggest, all right, if I give you a fund, the underlying, which is the Hong Kong share as well, you probably say you could do it yourself. So there's no way to get the deal. So I started suggest about US stock, another fund from different financial market, stuff like that. Yeah, even bonds, they say, oh, right, yeah, bond, I heard about it, but I don't know how I can get the bonds. Yeah, and even they don't know the code, or they don't understand about what's maturities,
Right.
coupons, and such a terminologies. Oh, you probably found, all right, oh, this is the point that I can provide my service to you. Yeah, and then you know what to do.
So you're not really, I mean, even though it's a discretionary portfolio, it's not like it's not like you have free reign into really what you do, though. I mean, you still have to sort of, so I guess from what I hear, though, it seems like when you first meet with a client, you first have to understand their framework of their frame of mind, their knowledge. And then from that is sort of decide a framework of, okay, how freely can I trade? Right? Can I experiment with some option? Is he comfortable with having some option, or is he comfortable with certain warrant investment? And having that frame of mind, then you can then determine how much playground area do I have? How much how much thing do I have? And that's kind of interesting because I've always thought discretionary portfolio basically means that, hey, I give you 5 million and I just leave it and forget it. And it doesn't sound like that at all based on what you've described. It sounds like, okay, well, it's not exactly that. It's not like I have free reign on what to do. I still have to make sure that I stay within the framework of what the investor can accept in terms of risk, in terms of his understanding. And like you said, I mean, if the investor already knows about Hong Kong stock and you're investing in Hong Kong stock, you're not adding any value. So that's why you have to bring additional value by bringing things that he doesn't understand or he or she doesn't understand, but you have to make it so that within the framework of his or her risk tolerance, and at the same time, you have to balance that return. So it's actually a lot more complicated than simply just getting the account and just investing in yourself.
Well, I would say that I partially agreed with you, and for the rest, it doesn't mean I disagree with you. It just got some point we can add on. Yeah. Oh yeah, risky. I love it. Yeah. I can't have it now. Obviously, I don't get that risky, and
we should do the podcast at after hours, and then we'll have that all together. So.
All right, yeah, you owe me a whiskey, right?
Yeah, I won't do that.
All right, it's Joe. Don't worry. Well, yeah, come back to the questions. Yeah, I would say that this is the style of the portfolio manager or the investment managers. It's got different kind. Some I would say I can see there's some investment managers, they would like to do what you say. You give me the money, I do the trade. That's it, and not much elaboration, not much explanations. You might not know what I'm buying, or you don't know what I'm dealing with. You know, if I say I'm help doing the what's it called, CDF or something,
CDF.
credit default swap, so CDF. So
okay, CDF.
Yeah,
right.
Yeah. If I do this to you, I don't know. Well, you probably think, oh yeah, I trust you, Nicholas, so I won't care about it. But try for fun, yeah. Ask some investor and say, all right, give me all your money and I do this for you. They probably think, what is that? If they don't understand, they will be very scared. If they don't scare, that's fine. But they are falling into a place which is gambling themselves, gambling their money, and gambling on this service agreement, investment agreement. They don't know what it is, but they still do it. Isn't it a bit risky? It's just like you go to the casino, like buying, oh, it's gonna be, the roulette stuff. Like, oh, the balls drop on red or black, it's just like that. It's just a little bit gambling. And
But here's an interesting. Are you big in movies, Nicholas? Do you like movies?
sorry, what do you mean by movies?
Do
Watching
you like
movies?
watching movies?
Of course, yes, I do. Yeah.
I'm not sure if you heard of a movie called The Big Short.
Yes, the
Have you?
English one, right? From Hollywood. Yeah.
Yeah, from Hollywood. It's about the 2008 financial.
Freeman's brother.
Yeah.
Yeah, I
Have you
love
seen it?
that. Yeah, I was
Okay.
in the
So,
cinema twice.
yeah, so you remember Christian Bale, right?
Yeah.
He's a portfolio manager.
Yeah.
And he has, obviously being a portfolio manager, he has the mandate to manage the money. But he's one of the few that foresaw what's going to happen to the US housing market. And he, I mean, according to the movie, he, without the consent of the investor, went ahead and sold over and bought over $1 billion short on these mortgage agreement. Now, obviously, it turned out that he's right and he made massive profit. But I remember how he was extremely pressured by the investors saying, what the hell you're doing? Why did you do this? Nobody bet against the US market.
Yeah.
I mean,
And yeah, and even the in one of the scenes, like the institutional corporate staff, like from the investment bank, they even laugh like, what? You bet on this? Oh yeah, I take your deal. Like stuff like that,
yeah,
everyone think,
yeah,
oh right, it will be a
okay,
good one. Yeah.
right. But I was just thinking, but he has, I mean, how much conviction does he needs to have to make that move? Like he actually bet over $1 billion against the US housing market when nobody bets against the US housing market. And then he has to face off with the investors when the housing bubble did burst, but how the banks are, sort of trying to delay the mark to market of those CDSs, try to delay them, and he can't really, there is a scene where he just basically keeps on losing money, right? He keeps on losing
For a
money
long time, and he was
for a
very,
long time.
very, yeah.
He was very worried. I mean, how do you foresee something? I mean, how does one like yourself, you do a discretionary portfolio? I guess number one, when you do see an opportunity that's outside the bound of your investment objective, so you do see an opportunity, but it's outside of what your client saying that they would be acceptable. How comfortable are you in terms of leaving that comfort zone and says, okay, this is a sure thing for me. I'm just going to go for it. And then I'll explain it to the investor later. I mean, how do you feel about the way that he did his bet? And at the same time, how do you face off with investors when things don't go really his way? I mean, I couldn't imagine the amount of stress that he went through when the fund was down, like, I don't know, it was down to like 40-50% before the banks start realizing his CDSs.
Yeah, I would say that the pressure is just can't quantify. We just can't say, oh, 10 pressures, 50 pressures, 100 pressures. It's just huge, and pressures and emotion is really personal. It's just like if he is facing that situations, he probably will be like, oh no, it's really stressed and really well, he will probably think of suicide or he want to die. But for some people, they just think, all right, I'm all right. I don't care about this win and loss. Oh, it's so easy for me. They probably just say, oh, that's not my personal issue. I won't put any emotion on it. It's really personal. So we can't quantify this, but I would say if you responsible for the portfolio, you probably think, oh right, I'm starting feeling a bit worried and stressed on the performance, because you have to like report to the client at the end, Well, at that moment, just like what you said, well, if I feel comfortable, I do it and explain to the client later. If it's win, you probably just say, hey Simon, you just won, let's say 50M US dollar. You probably say, oh, thank you, Nicholas, or Mr. Bao, thank you so much. And I don't know what you do, but I love you, and that's it. And that's the end of the conversations. And then you go to the yacht, having risky that you had, big meal party, stuff like that. But look, here, think about it. When you turn around all the situations, if you say, Simon, because of the market is so fluctuated and lots of back swarm or even financial tsunami and even the typhoon bad weather, the contract couldn't execute promptly, so you suffer let's say 50 or 70% losses in your portfolio. I'm sorry. What do you think about this? You probably well, I don't know. Well, it's got two situations. if you care about that
I would
money,
say, if it were me, I said, what are you gonna do? So okay, so I would say, okay, so what are you gonna do now? Right?
yeah, well, that's a good way because let me continue the situation. It's got two persons. One is like they got like huge amount of money and they're idle money. They don't
Yeah.
care about win or loss. They say just like maybe just like what you say. So what are you gonna do about it? You want to try again or you give up? Let me know. You're
How
probably
are you
saying
gonna
that.
get my money back? That's what I'm saying.
Yeah. You will say I want my fucking money back, right? Yeah. Um. So I probably say, all right, let's try again, and we have to do the strategy again, and let's plan for next year's, and that's it. But it's got another kind of client, which is not that much, but it's really happening in the world. They probably say they were crying, feeling very angry, they blame you, even doing some very horrible actions to you.
Yeah.
Okay, let me ask you, do you like movie,
Yeah.
Simon?
Yeah.
You like movie? All right.
Yeah.
Have you ever watched a movie called Money Monster? Is it Money Monster?
Oh, is that the George Clooney Jr.?
Yes.
Yeah.
Yes.
I vaguely remember. I did watch it, but I
Yeah.
vaguely
Yeah,
remember.
it was
Oh,
and the scene it was in a TV show, a live show, George is like, oh yeah, money is coming, it's funny, it's stuff like that. Yeah, oh yeah. See,
yeah.
I really watched that, yeah. And it's got a citizen going up and say, I'm an investor.
Right.
What's happened on the share price on particular stock? Yeah, and he want his money back. And George says, oh yeah, it's a glitch. And then that's the triggers to make that investor feeling very angry.
Mm,
Yeah, it's got two kinds. So that's why, um, just like what you say, oh, wow, from an investor perspective, I give you money and you do invest, and that's it. Well, that would be very ideal, yeah, and lovely moment. But think about it, when you do it for a very long time, you will experience different situations, even the client.
yeah.
You just can't guarantee how they have been. They probably say, all right, I give you some money, and it's just not some money. That's all their money.
It's
They
very.
got all their savings. Maybe, some investor might bet
Yeah.
in this investment decisions, like, all right, I get all the child rise of funds, even education funds, or even my futures 2 years living funds. I put it. I trust you, Simon. Okay, I pass you the money, and I hope you to give me like 8% per year, and which is more than a saving doing in a bank, just like 4%. They will have that thought, and they won't really directly tell you what they're thinking. So you better talk to them, try to understand more try to understand what they know about the financial market. Then you can um have some ideas that, all right, how far they come and how much they can take the risks. If you tell me just do the shares, I mean equities, like share price, like Nvidia's, Toyota, Honda, stuff like that.
Yeah.
All right. You probably only have a very limited weeks taking levels. You know why? Because share price doesn't drop like 90% like some stock in some area. I won't specifically say which area because such like that, like dropping 90% in a day. Yeah. So it can determine their experience in the investment market. Yeah. If they do bonds, they're probably facing a default risk, you know.
Okay.
Yeah. If they only say, oh yeah, we buy funds, all right, what funds? Like listed funds or private fund or stuff like that, you know, then you will know the clients, the investor, how much they bring through that, what's their history. You just can't say, hey, Simon, you say you are like, you know nothing about the investment field or financial market. Could you write me your story about your investment history? Like, let's say starting from 18 to, you say you're 47 or something. Yeah, in the past 30 years. Oh, 36, sorry, yeah. Like for your 20 or 30 years, you not much investor would do that, and you just can't say, hey, Simon, I got to like understand you more. We're gonna have a week only between you and me. We go outside for a week and like, wow, adventures in the jungle and then try to understand more about you. No. So you got to like have to understand your client within maybe 45 minutes to 60 minutes, in each conversations.
Yeah.
So that's why I have to like talk to the client, like what they expect and what they feel and what they understand more. If they say, oh, wow, well, I got another client. He's a very interesting one. He does shares, stock options, and he say, oh yeah, I
Which
do
market? Hong Kong market? US market?
Hong Kong only. Hong Kong only. Yeah,
Okay.
it will be getting worldwide later on, yeah. Yeah, he says, well, he just give me very confident and very professional way, and he's got a professor degree. Yeah,
Oh,
for
okay.
the education. Yeah,
He's
yeah.
smart.
So it's a really a doctor title.
Okay. So he's not
That
dumb.
shouldn't
He,
be done.
he's
Shouldn't be done.
he's
Yeah,
he's of intellect.
yeah. So when you see someone like that, all right, oh, you are really a doctor, all right, professor, or something like, you probably say, all right, you know more than me. But actually, after the conversations and I look at his trading history,
Yeah.
and he's mainly doing Hong Kong market only.
Okay.
Hong Kong only, even the index, the futures, yeah. But he waffled me a little bit like, well, I do lots of commodities tradings. Yeah, I know. I buy from low, sell from high, and then I sell from high, and then buy back from low. It's got like two ways of the like investment strategies.
Yeah.
All right, it sounds all right. It should be good. And then he got quite a few capitals that he showed me. Is a professional investor. Great, yes. And I was like, all right, great. And I started to like introduce him like a bit higher level of the investment um, products and the tools. And then right at this point, he's starting to like struggle. Like, what is that? I say structured products. Oh, he goes like, oh, what's happening for structured product? And then when I talk about, all right, you love gold. All right, how about we do use, and you said you do commodities and futures, right? Let's do gold. Yeah, gold futures. And then we talk about the settlement day and the delivery stuff and physical delivery. I'm not quite sure if you understand gold futures. If you're really holding the positions until the end day, the maturity days,
Yeah.
you have to get the gold. That's when you are buying the gold.
Right.
And there will be a real gold sending to your home. I don't know if you understand
So
and
physical gold. Yeah. Yeah.
and know about it. Yeah, you have to pay for it. It isn't like lucky draw, like, oh, I got the ticket and you send to me, oh yeah, bingo. It's isn't like that. You have to pay for it. And then
Right.
I started to realize that client not sure about this, and all right, maybe we could stop to this level. And yeah,
So then,
so
so it sounds to me there's a lot of like, I wouldn't say trial and error, but you're feeling him out. You're feeling him out where his comfort zone are, and try to see how much he can accept in terms of his understanding. Do you know what was his doctorate for? What is he a doctor of? Medical doctor, or is he some doctor of something else?
all right, it's a chemistry doctor.
Chemistry doctor. But did
Yes.
you find that he struggled to understand structured product, like the terms and like observations and things?
Well,
does he struggle to understand those concepts?
you know more than him now. Well, you can speak terminologies. Well, I won't say he's really struggled on the what's it called, on the terminologies.
Yeah.
No. Even the how the method or like the rules or regulate, I mean the rules, yeah. But he just feel like what is that? Is that really happening in the world? And what is this really playing? What is OTC? I can't believe that. I don't see it in the mobile app. It doesn't got any share price numbers or tickers.
Okay.
Yeah, and then you laugh, you understand where I'm coming from. Yeah, and it's probably you and me know, all right, maybe you haven't touched it. I won't say you struggle or you understand it. I won't say that, but it's like it's coming with that
He's just not
you feel not
comfortable.
comfortable. You feel
Yeah,
not
it's not.
comfortable. Then all right, we leave it and then we talk about of funds, bonds, and try to do some what's it called? Private equities and private credit, stuff like that. We're starting to like go to that positions.
Yeah, yeah. Who have you ever encountered some very difficult investors in your discretionary portfolio career?
Yes, yes.
What are some of the most difficult ones? What do they do that makes it so difficult?
Well, one of the prospective clients is just come to me that day and say, hey, yeah, I got a referral from, let's say, from Simon. Heard that you got a very good return in investment. I would like to appoint you to be my investment manager. And say, oh, welcome, thanks for the appreciation and stuff like that. And
Yeah.
we started to discuss the planning. And then he says, I won't give you that much of funds. Yeah, it's like less than $1 million Hong Kong dollars.
Really? Less than $1 million?
Yes.
How much you could do with that?
Actually not much. Because the investor things, right. If you're very good in making money,
Yeah.
then you can make this miracle happen again in whatever amount. That's what he thinks.
All right.
But
Okay, so less than $1 million. He's giving you less than $1 million.
let's say 1 million Hong Kong dollars. Let's say 1 million Hong Kong dollars, because it's far less than that. Well, I would say for the minimum starting point is like 3 million Hong Kong dollars for my firm. Yeah.
Right.
And if your case, I got to check with the internals, see if they accept these cases.
Okay.
Yeah. But of course, I still provide him some strategies and say, oh yeah, you could do, since your funds isn't that big and significant, we just can't get we can't even pass the minimum orders level,
Yeah.
Yeah, some of them is like, let's say it's buying bond, you got to be like 200K US for buying bonds. So that means you can buy bonds at this moment. So we forget about bonds. And he wants a very good return, double digit. It's double digit per years.
Okay.
Double
Wow.
digits.
All right.
Yeah. You were asking me like 8%, and I say I accept it. I accept it. Yeah. Yeah. And he wants double digit. Yeah.
All right. Less than
Yeah.
$1 million Hong Kong, but
Yeah.
it's double digit.
Yeah. And I say, all right, I could still provide you. Okay, so you have to like lower down your every investment amount. So you just can't buy blue chips, especially in Hong Kong. In US, you could buy like 1 share, 2 shares. Hong Kong is like 1 lot or 2 lot, but every lot is with different share numbers. Like one is 100 shares per lot, one is 1,000,
Yeah.
So I can't really do the main stock. Yes. And also at that period is a little bit recessions in the financial markets. So share price doesn't really go up, it goes sideways and even
How
drop.
long ago was that? When did this happen?
All right, just during COVID.
Oh, it's during COVID. Okay.
Yeah. Almost that period, yeah.
Okay.
Yeah. You have a very limited fund and it's a bad market and you ask for double digit. It's hard, but it is not impossible. All right, and I suggest, all right, you better do with derivative. All right. It's warrant, or turbo, you call it, yeah. Stock options,
Right.
you're gonna do that. You better deal with the long and short strategies, call and put.
So there's a lot of betting type products.
A very fast moving and speculative strategies.
Yeah, a lot of speculative products.
Yeah. And also, I would say, all right, you better do some index, future index trading. This is possible to meet your requirement, okay? And then we work it out, and he says it's a little bit too gamble, too aggressive, derivative. You probably lost all your money if you don't look at it closely and don't look at it carefully. I was like, you are right. You are a very experienced investor. You understand my pain point. Yeah, my pain point.
Yeah.
Yeah. And I would say the strategies is good, the proposal is good. Of course, we can't do that core and satellite asset allocation stuff because you just got 1 million Hong Kong dollars. Well, you could do that. Let's say 700K for core, 30% for a satellite. You could still do that, but I think if you got that less money, you probably, if you aim for 1 or 2 strategies, then will be better than very well-planned strategies. Yeah, and to answer your questions, the difficult part is he says, right, Nick, tell you what, I'm not a risk taker. I really trust on you, and your skill as well. I respect you, but I don't want any losses. All right, I don't want losses.
Who does?
And when you come to this point, silence for a few seconds. I just truthfully said, in a very sincerely ways to him, it's like, we can't guarantee the result and the market fluctuates. All right. This is the point that we can't really address. Even got any very good insight, but the market is changing.
Yeah.
This is really uncertain elements. And if you are requesting, he's requesting double-digit years, very limited capitals and low losses at the end. All right, and then I found out, all right, you could do some drawdown in the middle, but when the final outcome is like positive.
Yeah.
Yeah, and this is very tough decisions. And when we just like what you say, the client give money to managers, investment managers to invest, and the manager pretty much do what they want. And yeah, partially, yes. But in some investment regulators, they would say, all right, we will have something called investment guideline or investment objectives. It's basically a contract or agreement that between client and managers, just like you and me, Simon. All right, what we do and what we don't, what we invest, what we don't invest, what happen if this is happen, for example, drawdown or any losses, because lots of rules and regulations within the contract and black and white. Yeah. So if you say, oh, I don't accept losses more than 10%. If it does, you have to stop all the investment, like actually terminate all the contract. Yeah. And then, well, finally, I've been discussing with that client, and he kept talking to me like for a few months and say, I would like to observe your performance, Nicholas. Report to me like every 2 weeks or every month.
Report to you. Okay, report to him.
Report. That's the really the burdens. I was like, I could show you some of my performance in numbers.
Yeah.
Yeah. For few times. All right. I can't do like every 2 weeks or every month.
Right.
Yeah. Maybe the client doesn't understand is well, I only got like bare hands. I got 24 hours, so as you. All right, same as you. Just like what you say, I could like read all the news at the very morning. Okay, reading newspaper, reading the US news, globally, worldwide, do the analysis. Daily at the morning, maybe have some sales briefing or investment strategies.
Right.
Chit chat, stuff like that, or even go to FundKernels, breakfast with portfolio managers meeting, Yeah, I just don't have that much of time spare. All right. I try to be equal to every investor.
Right.
So I would say, if you agreed, I probably just pass you some commentaries or performance ratings. I mean, the numbers to you, and you digest it. I just can, all right, how I get 10%. I mean, how I get, there's real things, real cases, how I get 20% in the first half of 2024 by buying gold. I won't I just I don't have that much time to like explain. All right, in the 2023, I look at the specific details of the metal or precious metal market, and I
Yeah.
found the Chinese government buying lots of gold. The gold reserve is the highest in the world. And look at the micro situations, and yeah, in microwave. Oh, right. Oh, the traditional Chinese people, they would buy gold for their son and daughter while they marry or stuff like that, or even a newborn baby, give them a gold. You probably understand what I'm saying. Yeah. I won't just go through every thought or every research that I encountered. Yeah, so I would probably just say, I get this result in the first half. That's it. Pretty much like that, yeah.
You can't be reporting. I mean, you're not his
Report.
right?
Yeah.
He's your client, but you're not like a employee of his. Like I don't have to report it like that way, right? That's not
I would say that person is a prospective client. Yeah, prospective
okay.
client.
Did
Not
he
yet, not yet to be client yet.
Oh, okay. So he's
well,
not boarding it.
well,
Do you want him though? Do you want him to be your client? I mean, given that he seems to be very demanding in the sense that he's treating you like his employee more than his investment manager.
Well, I would say that first few in the first few months, I found it, wow, it's really demanding. I better be careful on my saying, all right? Yeah. And also from my true heart is like I don't want to like divide like or you are client or not client. I don't want to do like that.
Yeah.
You know, if client, oh yeah, I have to do most of the requests from you in terms of trading and instruction only. All right. Don't just say, all right, Simon, I'm your client. You have to have a phone call with me every night, 12 hours, every night before I sleep. You just can't say that, and you better respond to my WhatsApp message promptly. Yeah.
Have you had that? Have you had that like investor WhatsApping you like 2 a.m. in the morning?
I got quite a few people WhatsApp me in the AM time, but they're all right, because I'm in sleep. But when I in my careers, I heard some of the story about this from my friends, even college. Yeah, it does. It does happen, but it's not really happening to me. Yeah,
Okay.
thanks God. Yeah. So it's quite different. So I would say I showed them the result, and he said, "Oh, Nicholas, I really count on you. I trust on your skill. So, okay, let's come to a deal then. Let's make up the contract." I'll say, "Really? All right. And what's the terms? Let's discuss first and I prepare it. Then we can just come out and sign it off and whatever, and that's it." All right. And then he requests, say, you guarantee your return. Yes.
They want you to guarantee their returns.
He requests to write this sentence.
Yeah.
Yes, inside the contracts. And I checked with the compliance in my office, and the office just warmly remind me, "And you guarantee? If you can guarantee, I will invest on you as well." It's such humor. And I say, market isn't guaranteed. So I couldn't really take that case from compliance issues. Yeah. And I just talk to the client faithfully and say, in this case, I can't really help you invest. And of course, he is a little bit like angry and moody. And after a few discussions, I understand he really wants some money, capital. I mean, like increase in capitals. He got lots of plans, like life plan, like our families, children, stuff like that, even his business. He just want money. So I understand where he's coming from. That's why he say, "I won't lose." I can't lose the money. You got to give it double digits, and I trust you. I understand where he's coming from. So I feel a little bit ease on him. Yeah, a little bit relaxed. All right, I understand you now. All right, you're not picking on me. How we end these cases is like, how about this? I don't mind to share some investment strategies or some insight with you.
Yep.
Yeah, as a friend, all right, as a friend. I don't want to be like, well, trying not to be my client, otherwise I will be very busy. Yeah. So I show you some insight, let you to digest, let you to look at it, play around with it, observe the market, and make your own decisions.
Yep.
And you understand, can you really guarantee the result? All right.
Yep.
Yeah. And if you win, it's happy. Congratulations. If you lost, you have to be responsible for it. So it's a very tough client, one of the tough client, yeah.
Well, look, I think what your story really demonstrates that there is a disconnect between, you know, typical retail investors and professional like yourselves. And I think that's the problem. That's one of the reasons why FundKernel, when I set out to build FundKernel, I wanted to say, okay, look, we need to go B2B, right? We
Yeah.
have to go B2B because it is a different mindset. You talked about having a doctor, but his mindset is still very one-dimensional when it comes to investing. Like either they, you know, when I'm investing, I either make money or I lose money, right? Just don't lose money, right? And I think that's a very one-dimensional thinking, which is fine for a retail investor. I mean, regardless of how much net wealth you have, if you're not doing this full time, you're a retail investor in my mind. Compare that to someone like you who does this for a living. You think in a multi-dimensional way, right? You have various different consideration beyond return and risk. And that's why, especially for FundKernel, when we deal with complex product like in alternative investment, initially we were thinking about, okay, I mean, you know, all the talk about fintech is democratizing access to products. So the key theme, a lot of the democratizing is to have people get access to these products. But we were debating when my co-founder and I were talking about how do we want to move forward with FundKernel, is do we want to go B2C or do you want to go B2B? And I think we came to the consensus very quickly that no, we have to go B2B, because when dealing with alternative investment, I mean, even with simple investment, when you're looking for returns, when you're looking for managing a portfolio like a DPM like yourself, Nicholas, it can't be just return. You have to look at it in many different ways, right? And that's why professional like you, and I could clearly see from your story, the way they think, your typical investor think, and the way you think is very different, right? You have much more variables in your head. Your mind, at least from a financial point of view, your mind runs so much faster than a typical retail investor like myself. And you factor in so much more variable before you make a recommendation. It's something that as a normal person, we just can't do, or we're not trained to do, right? And that's why someone like you is very important in terms of managing wealth. And that's why I think services professional like yourselves is needed, especially dealing with, you know, beyond, I mean, not talking about just alternative, I mean, even just for simple equities and stocks and bond. We need people like yourself who actually know what they're doing and actually have the discipline, right? Have the discipline, have the emotional control, have the understanding of strategy, and the ability to factor in all the variables to manage that. And that's how you're able to sort of maybe generate these type of returns for your investors. Right? So, you know, I clearly see that. Well, look, Nicholas, you know, we're well past 1 hour.
All right.
You can see how these conversations can go past an hour. So,
do we have another episodes next time, maybe?
You know, no, look, welcome back anytime. I mean,
thank you.
Do
invite me. Love to be with you.
But hey, before we go, I know you have a charity.
Yes, I do.
Why don't you tell us about that?
Yeah, sure. I just got the charity foundation set up. Yeah, and in Hong Kong. Yeah, it's got a numbers register with the tax department in Hong Kong. Yes, and we are trying to do charity event activities functions within the local. No matter from young to teenage or adults or even elderly, no matter healthcare, or even help the poverty or educations, whatever is actually if it is really charity purpose, I would love to discuss. Yeah.
Okay. So how do we find how does the how do people find you? What's your coordinates?
All right. I will be in FundKernel. I'll be setting up account over there. So
No, I mean, no, just what's your email address? Where is there email address? Are you on Instagram or you're any other, social platform, email, phone number, if you want to give that out? Or
oh yeah. Well, probably I would ask, maybe I could ask you to paste my contact like in text style after you
okay.
publish this. Yeah. To talk to me any charity problem, well, become a donators or you
Good.
want us to help you. Yes.
What's the name of your charity?
Oh, it's called Spiritual Journey Charity Foundations.
Spiritual Journey
Charity Foundations.
Charity
Yes.
Foundation. All right, cool.
Yeah.
Okay. All right. Well, Nicholas,
Yeah.
thank you very much for your time. Love to have love to have you back. I think there's
Appreciate
a
it.
lot more we haven't talked about, but
Yeah.
hopefully the audience will get to know you a little bit more. I certainly learned a lot more about you and your experience. So thank you very much. And yeah, I'll post it. I'll post your LinkedIn profile when we hit this out. And
Okay.
if you're on FundKernel, if anybody's on FundKernel, just search for Nicholas and his name and connect with him, and hopefully we can do something there. But hey, look, appreciate your time. Thank you very much, Nicholas.
Thank you.
Okay.
Thank you, Simon. Cheers.
Yeah.
Thanks
Have a
so
good
much.
night. Yeah.
See you soon. Thank you.
Bye.
Goodbye.